Joining us now is Warren Ingram, Executive Director at Galileo Capital and 2011 Financial Advisor of the Year. Great to have you on the program. Thank you so much, Warren, for joining us, and congratulations on winning the 2011 Financial Advisor of the Year.
Thank you very much.
All right, let's start off with whether you'll be taking a conservative stance in this time of volatility, or whether you do believe that there is value to be found. It seems that there are two camps out there. Have you aligned yourself with one of them?
I tend to be a bit more pragmatic about these issues. I think people get a bit stuck in the noise of markets, and I think we end up listening too much to commentators like I'm doing right now, giving you a view and telling you to do something and take action now because something's happening. And I mean, in reality, markets have done what they're doing now for decades, and the fundamentals never change. The fundamentals are that good companies will generate good profits over long periods of time, and all you must do is not overpay for them. And right now they're not expensive. They might not be incredibly cheap, but they're not expensive. So to buy good quality companies in the South African market now for the next 5-10 years, you wouldn't go wrong doing that. Having said that, what I probably won't do, if I've got R1 million today, I probably wouldn't commit all of it in one shot. I'd buy over 6 months going into the market. So that's the stance I would take now.
Okay, well, what about the risks on a macro level? Are you very cognizant of what is happening? The debt overhang, does this worry you at all?
No, to be honest, it doesn't worry me. I mean, surely it's in the price. Surely all the bad news that we all know about, we've known about for many years now. I mean, we're going back to 2008. So I think this is something that's newsworthy, but I'm not sure that I would use it to make investment decisions now.
Just from my side, Warren, in terms of asset classes, and if you just look at it from a holistic perspective, you're saying there's value in a lot of these companies, and specifically the equity market, which I presume. What about something like the bond market? Is it not something to look at weighting your portfolio somewhat in the bond market just for a conservative view and sort of a protection view? If the rand does remain strong like this from foreign inflows, is it not something to look at, for the next sort of 12, 18 months, 24 months? Just your view on that.
Well, I think 12 to 24 months is such a short time frame for the average private investor. I mean, that kind of a view probably applies much more in the unit trust space and the institutional space. Fair enough. I mean, that's a great call. But the average private investor going into the bond market would be doing it for 5-10 years really. So that their asset allocation to bonds would be something that I think they should take a view on in terms of their financial position. And if they need 50% in bonds, then they should be feeding into the bond market just the same as they should into the equity market.
A caller from Cape Town, Andrew, wants to know what your position would be on Holt Sports. I know you don't look at specific companies, Warren, but very much linked to the consumer. We spoke about it a little earlier, and we know a recently listed company. What is your sense?
Yeah, and I actually watched it when it listed. I think it was about 31 Rand, if I'm not mistaken. And it was done by a book build whereby the share listed and gave a range of between 30 odd Rand and 38 Rand or something to that effect. And obviously came in at the lower end of that range. So obviously the appetite for that listing was just not quite there. Obviously the book was quite full and came in at 31 Rand. So I think it's quite a tightly held stock, and I think the market is just not right in terms of the sentiment feeling at the moment to accept new listings. So when they come in, you do have appetite, but I think a lot of jobbers come in there and tend to try and make a quick buck. So at 31 Rand, it did bounce to around 32 Rand, and there is some big selling pressure there. So in my opinion, if you can sort of in the short term get out around 31.50 plus, I would take it and look for opportunity elsewhere at this point.
Warren, what would you like exposure to when you look at the South African market? Is it resources? Is it within the consumer space? I know when it comes to asset allocation, you have to look at equities and you have to look at bonds versus cash. But within equities, there's always exposure to some kind of sector of the economy.
Well, I mean, if you look at something like the resources sector, if we're not near the sort of near top end of an almighty bull market in resources, then we must be fairly close to that type of a situation. Gold and platinum at the types of prices that they are now, I mean, if they've got another 5 or 10% from here, that's wonderful, but it's not something I'd be wanting to climb into now. So my view would be, I'm fairly happy to be in the typical South African industrials and financials, but I would be very scared of being even at weight in something like the resources sector now. So typically I try and underweight that.
Gold has also received a lot of attention. In fact, we've seen $120 movements in a span of a day and a half. Would you want physical exposure to the the gold market? Not at all.
No, I mean, let's just look at that. It's wonderful that you sell the story, because when you listen to these gold bulls for decades, they sell the story of gold being a safe haven in difficult times. It's done that job already. So if I'm buying gold now, physical gold now, what you need to understand is doesn't generate interest, doesn't generate dividends. You've got to find somebody, and let's not call them a sucker, but you've got to find somebody to buy that gold from you, that physical gold, at some point in the future.
And you're paying to hold gold, essentially.
Yeah, and you need somebody to buy it from you at a higher price.
If you were holding gold now, do you hold gold, Derek?
No, I don't.
And okay, well, you obviously.
No, I share the same views as Warren there in terms of saying, it's a risk on, risk off trade for gold. So at the moment, the risk is definitely on the table. It's been driven up and down in the short term, but the gold price is really related to that. So in my opinion, to come in and try play in the gold space at the levels that we're seeing of $1,820, it's uncanny for me. So I think I agree with the domestic view and say, look for fundamental value in the equity market, look for your high dividend payers and some nice value unlock over a 3-year plus view.
And Warren, it seems that the callers really want you to sort of focus on the resource sector. John gave us a call. Looking at Anglo, we know that it's trading at a P of around 6, 7, 8 or so, and BHP Billiton slightly higher than that, I think around 12. Diversified miners, isn't that the way to go? Because they say that if you buy and hold stocks, especially good quality stocks such as these diversified miners, over the long term, that is the way to go.
Sure, and that's a wonderful story. So as you say, they are diversified. They're not specifically invested in gold and platinum only. They spread right across the sector. So sure, it would be nice to be in them, but I wouldn't necessarily be at market weight in those companies. Still.
Okay, Warren, and what is your play right now with regards to looking at the sentiment going forward? Have you rebalanced or reweighted portfolios at this stage, and what would your preferred play be?
Well, I mean, I think if you listen to all the fund managers in the market, they're now telling you to go offshore as fast as you possibly can and get into the blue chip international stocks. And usually when they do that, it's probably the time to do the opposite. So, but I mean, that's another conversation for another day. I think buying good South African companies now, you won't go wrong.
South African companies, and stay away from foreign companies at this stage. And
sure.
and if you hold gold, would you sell gold at these levels?
I'd sell gold, yeah, sure, definitely. Leave the other 5 or 10% for somebody else to take it and take the risk with that. If you've been in gold for a while now, you've made fantastic returns, take the profits.